Good morning. Welcome. I am Dr. Zainaga from zwinnerforex.com. I'm here with lesson number 6, and last time we were going to show you, we promised to show you how to identify the trend in forex currencies. To make money consistently in the forex markets, you have to identify when a market is trending and when it isn't. When you can identify a trend developing by placing a trade in that direction of the trend, you have increased your chances of making money in forex. Okay, now, but how do you identify a trend and what are the characteristics of the trend? So this is what you're going to learn in this lesson 6. So here's the anatomy of an uptrend. Whenever you see the market going up and it makes a higher high than the previous one and the higher low than the previous low, that means the market is in an uptrend. Okay, the market never goes in a straight line. It goes in a zigzag. It goes up, comes back, goes up, comes back, goes up, and comes back. So when the market is an uptrend, it will goes up there, comes back down, and then goes back again. So when it goes back up again, it makes a higher high. It is higher than the previous high, and then it comes down, so it makes a low. So this low is higher than the previous low, and then it goes back up, now makes another high. Now this high is higher than this high. So this way you can identify, and this is one of the way to identify an uptrend, so you know the market is going in an uptrend. Here it is in the form of the candles. Now the candles go up here, comes back down, goes back up again. So here it has made a higher high than the previous high, then comes back down, and then here it has made a low which is higher than the previous low. So higher low, and then goes back up again. So it's got a higher high, higher than this one. Okay, and then it comes down, makes another low. So this low is higher than the previous low. Then goes up, another high is higher than this high, makes a low, is higher than the previous low, goes back up again here, makes a high, higher than previous high, and the low higher than the previous low, and goes back up again, and so on. So you know this market is in uptrend. Okay, right. Now there are also trends within a trend. Now if this is a trend on say 4 hours, or even say 1 hour, so on the lower time scale you'll find there are other trends. For example, this is an uptrend, and this comes down, this is a downtrend, an uptrend, and downtrend, uptrend, downtrend. So you will find many times there are trends within a trend. Basically this is the main trend. Okay, and these are other sideways side trends, smaller trends in the smaller time frame. Okay, now opposite to that, this is the lower trend. You can see here that the characteristics of a downtrend is that it makes a lower low, and it's a lower high as well. So here you can see this high is lower than the previous high, and here the low is lower than this previous low. Then goes back up again, makes a high, and this high is lower than the previous high, and then it comes back down. This again another low is much lower than the previous low. So this is how you can identify this market is in a downtrend. Okay, when you see the candles doing that. Now let's look here. Here are the original candles going down here, up down, similarly, so you can see it is in a downtrend, and it makes a high here, makes a low here, another high here, low here. So this high is lower than the previous high, and this low is higher than the previous, this low is lower than the previous low. So it happens like that. See, it goes, so this low is lower than the previous low, and the high is lower than the previous high. So this is how you can identify that the market is in a downtrend. And then again, within the trend you will find other trends as well. Okay, so there are small trends. Now here, this is what we call the sideways market, okay, or we call it a ranging market, because the market is ranging within, moving within a range. Okay, it goes up and then down, and goes up and down, goes up and down, up and down, up and down, like that. So this is a ranging market. So you have uptrend, you have downtrend, and you have ranging markets. So there are three market conditions, right? Okay, now another technique you can use to identify a trend is by using moving average. So to find the trend, and if you are trading on a smaller short-term trading, 30 period simple moving average for short-term, and then in 200, which we are going to come later. Okay, now when you see the market is above the 30 period simple moving average, that means the market is moving up, going up. Okay, so this is all the buy signals you are getting here. So how you getting buy signals? If you draw a line, which will come later on in the next page or two. So when the market comes down, for example, market comes down here, you buy here, and that market goes up, you get out here, buy again, get out, comes down, buy again. So every time it comes and touches the bottom side, the lower side, you keep buying, and then you will find that the market is going to range for a little while. See, this is ranging, and after ranging it breaks, and then market goes down. So when the candles are below the 30 period moving average, that is the market is in a downtrend, and that's a good time to sell. And then again consolidates and ranges for a little while, and then it goes back up, and that's the time to buy. So you see the stages of the market. Market comes down here, first stage. This is the second stage, going back up. Consolidation, that's the third stage. Then coming back down, that's the fourth stage. Okay, then it's consolidation, again the first stage. Then goes back up again, that's the second stage. So all markets move in 4 different stages, right? And they move in either they're making uptrend, or they're making downtrend, or they are consolidating, right? 4 stages and 3 conditions. 4 market stages and 3 market conditions. Okay, so this is how you can identify the markets going up or down, and then you trade in that direction. That's when you make money. Okay, now this was for the smaller short-term trading. Now let's see the long-term trading. Now if you're long-term trading, you use 200 days simple moving average. That is 200 period. It's written days here because these are all days. Okay, each candle is a day, so it's 200 days. But what I'm trying to explain, you are going to use 200 periods. So if it's an hourly chart, so you have 200 hours, okay, and the average of 200 hours. If you have a daily chart, the average of 200 days. So this is the average. See, this is the moving average. It's called moving because it moves along this line, so it makes a smooth line. This is the average of those days. Okay, so when the market is above the 200 period simple moving average, that is the time to buy. Okay, now if you were to trade 4 hour time frame or the daily time frame, and that is the long term. Okay, those trades can run for days and sometimes they can run for months. One trade you are here and it can go for months and months. Okay, and you make thousands and thousands of pounds or dollars profit on the long term basis, and you do not have to monitor it every day and don't have to sit in front of the computer all day long. Okay, so when prices are above the 200 SMA, that is simple moving average, long trades are favored. Long trade means buy, okay, buying trades. And when the prices are below the 200 SMA, simple moving average, short trades are favored. Like instance here, for example, you see all the candles are now below the 200 moving average. So this is a good time to sell and stay in the market short. Okay, so this is what you can use the moving averages for. Now, forex trends using trend lines. Okay, now the purpose of trend lines is to identify a trend. As price moves in a trend, highs and lows are formed on the chart. By connecting these highs and lows with a line, we are able to identify what the market trend is. In an uptrend, draw a line through the lowest points in the trend without letting the line cross through prices. I'm going to show you on the next page. In the downtrend, draw a line through the highest points in the trend without letting the line cross through prices. In both cases, you will need a minimum of at least 2 touches of the trend line. So here they are. Here the market is going up and down, as I explained. It's got making higher high and higher high here, higher low and again higher low. So when you draw a line between these two lines, these two points, okay, you get a trend line and you will see that the market is going up. And when the trend line is broken, the market goes down. That's a very good time to sell, because this trend line is also acting as a support line. So we're going to discuss about support and resistance later on in the next lesson. Okay, so this was trend line indicating an uptrend. Now here is a trend line indicating a downtrend. See, the market is coming down. You are getting lower highs, okay, and lower lows. This low is lower than this, and this low is lower than this. This high is lower than this, and this high is also lower than this one. So what you do, you join these two points together and draw a line straight, and this line works as a resistance. Okay, it's not letting the market go up, so this is resistance, and we will touch on that subject later on. So this is how you identify the trend by trend lines, the trend. Here is a USD Japanese yen in an uptrend. So what you do, if you can see these yellow spots, you join these two spots together and let the line go through as high as you can make it. And when you see the market coming down, touching this line, you buy at that time, because the market is in uptrend. Here the market comes down, you buy again. Okay, so but what happens here, the market, instead of going back up, it broken and then went up a bit and then got broken, went up again and then got broken, and then again here is going back up in a different line. Okay, so this is how you identify, by joining these two points together at these lower points for an uptrend. And for a downtrend, for example this downtrend, what you do is join these two lines together and you will get a downtrend. Okay, right, now next one, identifying forex support and resistance levels. right? Now the lessons in this section, which I'm going to teach you in lesson number 7 after a few more days, you will learn how to identify support and resistance levels in the forex currencies, and it is tremendously helpful in identifying which are the levels that prices will most likely bounce off. And if prices break these support and resistance levels, you know which direction to trade. Okay, it is very, very important. Support and resistance. Until lesson number 7, uh, keep watching and keep repeating what you have learned from through lesson 1 to lesson 6, and reinforce your learning curve, and then we look forward to the next lesson in a few days time, lesson number 7, support and resistance levels. Until then, it's goodbye and thank you for watching.